Hello and welcome to the Expert Exchange. Joining me is Brianne, Gardner, Wealth Manager and Financial Advisor with Velocity Investment Partners at Raymond James. We're going to review her past picks from September 2024 and get some additional picks as we head into 2025. Brianne, thanks so much for being here.
Yeah, thanks for having me.
All right, now your first pick, Capital Power, is up almost 30% since we spoke. Is it still a hold for you?
Yeah, Capital Power, CPX. We still like this stock. 1 month, up almost 24%, 3 months, 40%, and 6 months, almost 70%. Great leading North American power producer that does focus on sustainable energy solutions like wind, solar, natural gas, and does operate across Canada and the US. So the stock had benefited from sector rotation that we believe there's more upside, with the Bank of Canada likely to continue to cut rates, which is good for Capital Power and other companies in that sector. They have a great business model that does prioritize acquiring and developing power-generated projects, ensuring really a stable and growing revenue stream. So financially, the company does check our boxes, strong performance and sales growing at an annual rate of almost 13% over the past decades, and earnings per share increasing at over 11%. So recently, CPX boosted its dividend by 6%. So again, great dividend stock, offering an attractive yield of 4.2%. So we do remain positive on the company's outlook and continue to hold the stock.
Is there a price target for this one?
For us right now, we still see potentially another 15% upside from here.
Okay. All right, now let's move to label maker CCL. It's down around 6% since we spoke. Now, does this still look good to you?
Yeah, CCL, again, in the industrials, world's largest kind of label maker. So Avery labels, most people would know, are commonly known for in offices, specialty packaging, various packages like that. The company also produces banknotes for 24 countries. So again, they do have a lot of range of products, and recently their results across the segments were a little bit mixed on earnings, and that reason did kind of create additional volatility in the stock. So something that we're watching closely, I think softer label growth in Q4 may create, short-term challenges, but we do see that they have been investing in strategic other companies and strategic acquisitions and focusing on higher growth areas. So I do think they are positioned to continue to have success. We do have a price target of $87 for this stock, so another 13% upside from here. And with the recent pullback, we do see that this stock does present opportunities for investors and the stock that we continue to hold and actually plan to add additional weight in our portfolios.
And let's move to Wheaton Precious Metals. Where are you guys on that?
Yeah, Wheaton Precious Metals, a stock in the materials sector that we still own, still bullish on. Over the past 12 months has returned around 35%, 6 months around 12%. So again, we have seen a slight pullback in the stock and across the board in the gold sector. Wheaton Precious Metals is a Canadian multinational precious metals company that does focus on gold and silver. So we have seen with gold and silver have a slight pullback given the US dollar appreciation and the spike up we've seen in the US dollar that has put pressure on gold and on the expectations of lower rate cuts, which means higher storage costs for companies like Wheaton Precious Metals. So looking ahead, the outlook for the materials sector and for gold, we do see strong demand from central banks. So they're continuously buying gold, which would push up Wheaton Precious Metals as well. And then potential escalation of geopolitical tension, especially with Trump now back in power. We do see things starting to get a little bit heightened there. That could also be a plea for safety, and a lot of people do resort to gold, which we think would give a boost to Wheaton Precious Metals again. So consensus price target on the street is about 105, which is presenting almost a 22% upside from here for the stock. So we will be adding more for our clients in our portfolios.
All right, and finally, let's get to the new stuff. What are your picks as we move into 2025?
Yeah, headed into 2025, one stock that we do like and are bullish on is TMO, or Thermo Fisher Scientific, in the U.S. healthcare space. A global leader really in the scientific services, providing essential tools and support for research, healthcare, and across the industry. So we do expect steady growth throughout 2025 for the stock. And more visible replacing pandemic-related revenue, which has become less significant. So, for example, we've seen high demand for diagnostic products, significant growth expected as healthcare providers are expanding testing capabilities. We did see the stock raise their full-year earnings per share guidance, which is bullish, and with the last quarter of the year expected to increase 3% higher than previous estimates. So we are optimistic on the stock and watching for signs of really industry recovery in the healthcare space. So RJ does has a price target of $660 US per share, so about 26% upside from here.
Okay, now is there anything in the energy space?
Yeah, a great Canadian energy name that we like for 2025 is CNQ, or Canadian Natural Resources. 12-month return around 13%, and has had a slight pullback too. So it is presenting a favorable entry point for us. They are a key player in Canada's energy industry and ranks the 5th largest oil and gas company by revenue. So it has worked hard to reduce their debt, return cash to shareholders through dividends and share buybacks, which is great to see. Still carries a little bit more debt than some other competitors, which we are keeping an eye on. But we see the global oil market gaining some relief. There has been some ceasefire happening, tensions overseas and in the Middle East, which is showing, things could be picking up for the energy sector. And with Trump in office as well, we are a little bit more bullish on the energy space headed into 2025. So energy tariffs are unlikely, we believe, as they would harm both sides of the border. And with 40% of the U.S. really refined crude being imported, 60% of which comes from Canada. So this trade relationship does remain crucial. So we are still optimistic on the stock in the near term, and we have a consensus target of about $56 per share, or almost 18% upside from here.
All right, and is there anything in the financial sector?
Yeah, financials, we have been bullish on financials 2024 through to 2025 as well, and has performed very well this year. So one of those stocks is Fairfax, or FFH. They do specialize in kind of property and casualty insurance, reinsurance, and investment management. Do operate kind of through North America, Latin America, Europe, Asia, and the Middle East. So, widespread across the globe. And we saw in Q3, they reported over $1 billion in net earnings. And that does show us, strong income, substantial investment gains, and, double-digit growth in the operating income that they've had done. So we see more upside from here. Still another potential 12%. So consensus price target on the street is about $22.16 per share.
All right. Well, thank you so much, Brianne. That's Brianne Gardner, Wealth Manager and Financial Advisor with Velocity Investment Partners at Raymond James. As always, great to have you.
Thanks for having me.